Rent in Toronto is so friggin' expensive. What can you actually afford to rent with the average income? This is exactly what we'll be going over on this reaction video. Now, if you're looking for some help on how to navigate this real estate market, because I've said this so much, I'll say it again, it's really weird and turbulent right now. And even though we just got an interest rate cut, listings continue to pile up and there are more sellers than there are buyers right now. So the dynamics are shifting, and it's definitely not what a lot of people are saying out there where, hey, the market's bouncing back up because of the rate cut. In fact, it's actually the opposite. People are still not looking and we're still getting more stuff. So it's the wrong signal people are paying attention to. So if you do want to talk to me about what to do on your next move in the Greater Toronto area in 2024 for your properties or the properties you want to buy, you can book a call with me. Use the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prop, fill in your name, email, mobile phone number, and the question you have for me. And then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen. If you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the article we'll be looking through, and it's kind of like charts and calculators all mixed in one, which is hats off to CBC for putting this together. It's where can you afford to rent, right? So there's this idea that everyone kind of gravitates towards where, your housing shelter cost should not cost more than a third or 30%, depending on who you talk to, of your gross income. So I've said it many, many times before that even the banks, when you're on the buying side, they look at about 47% of your gross income, okay? 47, 48, your gross debt service ratio. And they qualify for more, but you're supposed to use a third, right? And it hasn't existed in Toronto for like decades. Now, when I apply this to the rental market on the exact same thing, but there's a caveat to all of this when I apply it to the rental market. You could technically afford as much as you want as long as the landlord lets you in. But any prudent landlord or even like our investor clients, we always look for that 3x ratio, which is the same thing as the 30% rule. You want the gross income to be 3 times what you're asking in rent. So obviously, if you have lower than the normal income, you have to find a landlord that's willing to take you so that they're actually like, okay, fine, I'll take a chance on you. Because now that the, call it, relationship between landlords and tenants are so contentious and there's so much fake documents, I find that landlords are more picky. There's more fake documents from the tenant side, and things are getting a little bit tricky in that sense. But I'm going to go through where you can actually rent with the type of income that's average to most Torontonians. So looking at here, you can see that they ask you what your annual household income is. So the household income is about $78,000. So where am I getting this from? This is from CMHC data that's down here. So you can see that the average household income before taxes is $109,000. I am personally just using the median income right now, which means for anyone that doesn't remember statistics, half of the people have more than this 78,000, half have less, which means that 50% of the people will have this 78,000. The reason why the average is higher is just because there's a lot more high earning people in Toronto. It skews the numbers up, right? And again, I've said it many times before, there's a lot of money in Toronto. So when you look at this calculator, it can show you that basically you can afford $1,959 for rent. And how they basically amount to that is they just take this, divide by 12, which is how many months, and divide by 3. That's how you get this number. And they're saying that it should be about 30% of your income, right? So this is why I said divide by 3. And they include utilities. Granted, in this calculator, they don't put utilities. So as a household income, remember, household meaning it could be one person, it could be 2 people. So call it like, maybe you get a 1-bedroom or 1 and 10. So what are you getting for $2,000, right? So I, just for reference, just use this as a 2-bedroom here. And you can see that there's only 1,600 potential vacant 2-bedrooms in this area of Toronto. So when you look here, there's a map that basically shows you anything red means you're priced out. In blue, you're okay. So you can see there's still some stuff in like downtown core Toronto and different area codes, which is reasonable. But then again, you're assuming you need a 2-bedroom. Now, what happens if you go into a 1-bedroom? Obviously, it becomes a little bit more affordable. So there are still pockets in here that make sense. But if you're 2 people on, say, $78,000 as a medium income, you really still restricted to like kind of the suburbs out here or like over here, which to me kind of looks like the Jane and Finch, Rexdale area of Toronto, because this line over here basically delineates between York Region and Toronto. So it's not that many options, or you can go to Durham. So that's kind of why when people are looking for, good neighborhoods and they look at the affordability of rent, it's not there. This is exactly why, right? So when I scroll down here, it tells you as a percentage of the total housing stock, how many properties are actually available at this price point. And it said less than 1%, which is not many. It's really not many. And if we use that in nominal terms, you can see that there's only 1,600 units or so for all the people looking to rent a place right now. And I would imagine there's more than 1,600 people looking for rent in all of Toronto. So that's why it's very challenging right now. And that's kind of why like a lot of tenants resorting to fabricating documents. And I would say in the last year or so, since January, I feel like we've, anecdotally from our team has seen at least 2x in the amount of like fake documents. So before it's like maybe like 1 in 6 or 7, maybe now we're getting like 1 in 3, 1 in 4. And then you have the really bad ones, and then you have the ones that are really, really good. That's why I encourage everybody. We have to now start using different ways of screening people, which includes us pulling their credit as well, right? So it's very, very challenging and very contentious of a relationship right now. Now you can kind of see in this chart over here, this just talks about the average income going up and also the cost of a 2-bedroom. And you can see that basically during the pandemic, it kind of delayed and kind of like spread apart, which is the exact same kind of graph if you look at prices. And what has happened is we have too many people coming in here looking for accommodations and housing, and because immigration coming in actually drives income down a little bit in the beginning, because you have a lot more people looking for the same job. So therefore the employers can pay less and there's more people likely to work there. But at the same time, so many people coming in to the country and they need accommodation, it drives the rents up. So that spread keeps going and going and going. So the only way to really fix this is you have to reduce immigration, which means that there's a larger demand for employees and they can command higher wages. So the wages go up. At the same time, there's less of a demand on the housing, which means that the rents can come down, right? So when you have that dynamic, it'll be better. But we're doing the opposite right now. Now, let me show you what it looks like if you have $50,000. And the reason I want to use $50,000 is because like, I remember when I first graduated, I didn't make this much, but let's just say inflation, kind of caught up there. And then someone who's recently graduating with like a call it professional degree or undergrad, whatever, is making $50,000, which is reasonably, I would say, on above average if I had to take a guess right now. So when you look at it, it means that you can afford $1,250. What is that? Literally, you're sharing a room. You could be sharing a 1+1. You may be taking the den on the +1 with somebody else, right? That's how you're going to make the math work. This assumes that the landlord lets two people that aren't related or in a relationship, share a 1+1, right? So it's very challenging. The other thing really is that you kind of have to rent basements or just buy rooms. And that's kind of what a lot of people are resorting to, right? If you do not have the family support where your family owns real estate and they can house you, this is realistically your only option left, right? You have to go in like a basement, rent by room, or share a combination with someone. Because if you look all the way down here, right, everything is red. Everything is red. Nothing that's called it even within an hour drive of a Union Station. So that's why it's very, very challenging right now. And when we look at the percentage of available units in Toronto, you're at 0.1%. That means there's 1 unit in 1,000 units that meet this criteria. It's insane. It's just insane. It's just not possible, right? Especially if you're making $50,000, which is even a little bit more than minimum wage. So this is, I think, one of the challenges of our affordability housing crisis right now. Now, there's a couple of things kind of highlighted I want to bring up to your attention. It says the federal government is now trying to manage the situation by putting quotas on numbers of visa, which will help in the long run. But we've got 3 or 4 years of trying to build enough housing to accommodate all the people that already came in. So this is kind of what I was saying about this chart over here. We've had so many people come in, prices are going up. And even if we stop and cap immigrations right now, we're going to have to create more homes for the people that already came here since the pandemic. And there's a lot of talks right now about deportation and everything. And this is absolutely wild what kind of political unrest that is coming because of this housing shortage. Now, in addition, the construction industry is grappling with a labor shortage and high inflation driving material costs up. And this is what I was saying. If it's going to cost you, call it $10 to create 1 unit for someone to accommodate, and that $10 and you can only charge $8 in rent, you're not going to do it. So the math just doesn't make sense. So when you have a lack of kind of like construction workers and laborers, they can demand higher prices. And when they demand higher prices, your cost of that $10 unit goes up and they have to pass it on to the people who are renting there. And when the wages don't go higher up because there's less demand for these employees, then that means there's more people cramming in. We don't have enough accommodation, and which means that people with lower incomes are kind of just like left to the side and don't have affordability on housing. And that's kind of the problem we're seeing right now. There's no one silver bullet, and that's why everyone has been talking. This housing crisis is getting worse and worse and worse. Now, there is some talks about this vacancy control coming in, and I'll read it and I'll explain it to you. So this says that vacancy control is another critical legislation that can help prevent steep rent hikes when tenants move out and new ones come in. which means right now, if you're under rent control, you cannot increase the rent past a certain guideline that's set by the Ontario government. This year it's 2.5. But if you have vacancy control, it just means that when a new tenant comes in, you can't increase the rent to market. Because even for buildings that are under rent control right now, if that tenant moves out, or for whatever reason, a mutual release, then you can bring in a new tenant and you can charge market rent. Vacancy control prevents you from charging market rent. So it says here that I've changed my mind in the last 3 to 4 years as I've seen these massive rent increases. We need to preserve those lower rents, and they propose that the first 10 years of new rentals to avoid impeding the construction of much needed new units. So what they're saying is, hey, we need to cap the rent at some point, but in the first 10 years, maybe we allow it. So either way, it's kind of like rent control. There's going to be a side effect of all of this. And if you cap, call it private enterprise, from making money, they're going to move their money somewhere else. So unless you have governments creating these, call it subsidized or affordable kind of rental units, nobody is going to have their rental incomes capped, right? It's the same analogy I have always explained. If you are working and you went to your boss and said, hey, I demand a higher income now because I did X, Y, and Z. But they say, oh, sorry, I can't. I'm not allowed to increase your income by more than 2.5%. What are you going to do? You're going to be like, well, I'm not going to work as hard. Why am I producing so much? Same concept here, right? You need free markets, right? So that's kind of why I think our housing affordability challenge is so difficult to solve right now. And we need to implement so many different ways to, 1, increase supply, 2, let incomes go higher, and 3, keep prices from going up. And eventually over time, it settles back down. But at the moment right now, it's very contentious. Anyways, I hope this gives a little bit of light on kind of what's happening in kind of the affordability on the rental side, because it's getting worse right now. And every single kind of like lease that we're helping our investors with right now, everyone is so on edge about who they let in because of the land of the tenant board. And unless they're almost like a triple A, they don't really want to let them in. So that's very, very unwelcoming for kind of what I just talked about. Because if more than half the people can't afford homes just based on that income, you basically have to look for landlords who are willing to accept less than 3 times the income for you to have housing, right? And that's kind of the problem right now. Anyways, I hope this gives you an idea of what's happening on the rental side. If you do want to work with our team for your next move on the real estate market, you can do so by booking a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.